You're listening to the Mental Money Podcast, the show that shows you how to master your mind to maximize your money. This show is for people who love to watch their bank accounts grow while shifting their relationship to money. Without further ado, let's get these insider insights from today's leading expert. Calling all minority entrepreneurs. We're offering a $20,000 grant to help you reach your business goals. The 20K Growth Grant is open now, and applications are being accepted until March 16th, 2023. Don't miss the opportunity to get the funding you need to take your business to the next level. Apply now and let us help you reach your dreams. On today's episode of the Mental Money Podcast, we speak with Sean Weisbrot. He's an American investor, entrepreneur, and advisor who's lived in Asia for 14 years. After getting a degree in psychology, he bought a one-way ticket to China at the age of 22. He lived in China for 10 years and taught himself to be fluent and literate in Mandarin at a business level. He started multiple businesses in Asia, including an agency that sold $15 million in services in 18 months. In 2018, he started Nerve, a B2B software as a service company. In 2020, he started We Live to Build, a podcast about entrepreneurship and psychology where he interviews business owners grossing 7 to 9 figures annually. In 2022, he turned We Live to Build into a consulting firm with fractional executive services. Okay, so you're listening to the Mental Money Podcast, and I'm Nathalie, for those of you who are new, but for anyone coming back, thank you for returning. Today we have with us Sean, and I'm not even going to try to butcher your last name, but I'm gonna try anyway because I'm a little ambitious. So Weisbrot?
The American way of saying it is Weisbrot, yeah.
Okay, what's the right way to say
it? The Germans would say Weisbrot.
Weisbrot.
Yeah, the W is a V and the S sound and the B sound together with the R. Yeah, they kind of combine.
Okay, got you. All right, I tried. I sure did.
Okay.
Sean, thank you so much for following up with me and like kind of just circling back. The last time we spoke, I didn't really have this clarity that I have now. So I feel like us having this conversation definitely will pretty much round out our series for the month of funding. When we spoke, we talked a little bit about like what you were going through with your series funding. And I think that insight will be really helpful to people listening. And then also, I think you also offer really great insight to what you just told me about like how you were able to pivot through that situation. So first and foremost, let us know who you are.
I'm Sean Weisbrot. I'm an American. I lived in Asia for 14 years. 10 of those years were in China. I taught myself to be fluent and literate in Mandarin while I was there, got into business while I was there. Ended up doing a consulting firm for a lot of Chinese clients who couldn't speak any English, and sold about $15 million worth of services in a 2-year period. And then the market looked like it was changing. There was a lot of things changing in China at the time. I decided to leave China and stop that business, and took some of the money I had made and started a business-to-business software as a service company, and ran that for a few years and had a team of up to 17 at the highest point. And we had raised some money, and we can go into that a little bit more if you'd like. But after that, while I was running that business, I was living in Vietnam and traveling around. And then COVID hit and I was stuck in Vietnam, and now I'm based in Portugal.
Okay, got you. Why Portugal? What was that like? What was that decision?
So when I was in Miami a year and a half ago, after I came back from Vietnam, I realized that Asia was going to remain closed for probably the majority of 2022, and it looks like I was right. And so I knew that I couldn't go back to Asia, and I didn't want to stay in America. So I thought Europe was the next best place to go, because I'd been there a few times and I always thought that it was enjoyable, but I didn't really know enough about it to have like the understanding of if I'd like to live there or not. So I figured, screw it, let's move there and figure it out.
Got you. So what part of Miami?
My family is from Kendall, but they currently live in Broward County. It's about half an hour north of Miami.
Yeah, I actually used to live in Florida for some time. I went to school at FIU, graduated. I'm a Panther.
Okay. I went to UF.
Really?
Yeah.
So like, why? I love Florida. Well, Florida's like one of those places where like, I wish I could live, but I just can't bring myself to be there.
Mm.
Maybe you probably have a similar experience, but not like, why like not Florida? Florida is really great for business as far as like, it being like a non-state tax state. A lot of people open businesses there. Your line of work, I could imagine, would do pretty well there. Why not America, namely Miami?
I just never really liked America, to be honest.
Really?
Yeah, I know you just mentioned state tax versus non-state tax. The thing is, as a as a non-resident of the US,
Mhm.
having a foreign company living overseas, earning money outside of the US, there's specific tax laws that we get the benefit of,
Mhm.
where basically the first $110,000 that we declare is tax-free.
Mhm.
So, I mean, I didn't like America before I knew about that law. So I just got, I just lucked out in having that law be available.
Got you. Okay, so software as a service company, what made you decide that that was the best route to go with the consulting that you were doing?
It was meant to be a complete pivot for me because I had started multiple businesses before the consulting firm.
Mhm.
And the one thing that I hadn't done that I felt I really needed to do to challenge myself in my 30s was to start a tech company, because I saw all over the world people were starting tech companies, and some of them were having some really incredible success. And I thought, I've already gotten to a certain level and I don't want to remain there. I don't want to remain complacent. I have to challenge myself further. So what's something that I can do to really challenge myself? And, what better than a software as a service company that has the potential to be a multi-billion dollar company?
Right. Okay. That's fair. What service were you offering as a software?
So we were building a team collaboration platform that was designed to compete with Slack and Microsoft Teams.
hmm So, how did you decide you'd position yourself and improve on the value of like Slack?
So actually, we didn't start as a software as a service company. We started as an end user messaging platform.
Mm,
But because of COVID, we decided it was a really good time to pivot into team collaboration, and it completely required us to toss our code base and start again. So it added a few extra years of development. I think that may have been one of the reasons we didn't have success. But the goal for how we would compete with Slack and Teams was that if you look at those platforms, they don't really have a system that works at scale. What I mean by that is if you've got 10 or 15 employees, it works quite well.
mm,
Once you grow beyond that, it starts to break down really fast.
mm,
One of the reasons being is they've got like a single layer of chats. So, for example, you might have marketing dash uh, PR, marketing dash, PR calendars, marketing dash PR schedule, right? So there may be different things that you want to talk about with your team, but the more people you have in them, the less work actually gets done. The more channels you have, the harder it is for anyone to follow any specific channel. It doesn't collapse very well. It doesn't group. There's just so many problems just in that regard. And the way Slack thought it would handle it was with something called threads. But the problem is those threads were kind of off to the side. You have to find them, they're not permanently visible on your screen. There's just so many different problems.
mm,
Um, and then when you look at the way that Slack, for example, handled integrations, they have this kind of shallow integration system where they build out the integrations to the different companies, or they let other companies build out the integrations into them. But and the way that they're designed is it literally just tells you something has happened. It's more like an activity feed from the different applications your team is using than anything else. You can't actually manage those other applications without leaving Slack in order to go manage them. And so we call this context switching, right? Your team is constantly changing between different applications to get work done. And every time they do this, they have to change what they're thinking about. And every time you do that, they lose efficiency. And if you're doing this, 100 or more times a day for every individual employee, it's a massive drain on
mm.
efficiency and therefore a waste of spending. So we thought we could solve both of those problems.
Okay. And is there research to support like the context switching and how it causes that decline in efficiency?
So I don't have specific numbers, but my former COO did do a lot of the research, and he put together a white paper that's like 60 pages that we published.
Mm,
That was part of our pitch deck and fundraising and all of that. And
okay.
he pulled from many different sources. Like Statista has a bunch of reports, and there's other companies that are specifically exist to do this research, and then they provide the data, and you pay for it. So we pulled from a lot of different sources from that.
Okay, gotcha. Yeah, and I asked specifically because of that. Like, I think a lot of people go into any kind of fundraising, especially on this side of things, right? With the newer entrepreneurs, they don't really know what are going to be asked of them, and
Mm.
statistical data to support why this is a viable company to fund, essentially, is part of that. So that's why I asked. So could you talk a little bit more about what investors wanted to know about your business? Like, just give me a little bit of details into like what the stakes were and how you decided to work with an investor. Like, how did you know this was a good fit?
So we had only ever raised a seed round because I funded us through family and friends and pre-seed,
Okay.
which was a lot more than I wanted to spend. Um, so the group of investors that I had in the seed round, one of them was a venture capitalist that I just cold emailed, and we spoke for about a year or more, and I met him in person in Switzerland when I happened to be in Europe one time,
Mm,
and he eventually funded us.
mm,
And another guy was a former client of mine when I was doing the consulting. He's American Indian, like his family was Indian, but he was raised in the US.
mm,
Uh, and he brought in two of his friends as well. And then the last person, who was the largest investor, he was a longtime friend of mine that I met in China a long time ago.
got you.
So for all of them, it was quite simple. It was mostly just they believed in me. They
Mm,
believed in the vision. They could see that there was value. They could see that there were other companies out there doing it. So they knew that, there was a market for it, and there was a potential to grab market share and all of that. But we did also try talking to other investors that we didn't know.
mm,
And the majority of them, especially at the seed round, they wanted to know who else was investing. That was the most important thing. Is how much have you invested, if anything? How
yeah.
much have other people invested? How much equity do they get from this round? What is the post money valuation that they agreed upon?
Mm,
Do you have any co-founders? Is there a pool for your employees? Who is your team? Why are you the right people to be doing this? Why is now the right time to be doing this?
mm,
Um, how do you plan on returning our money?
right.
Right? Like how are you going to turn this into a viable business model that can generate profit? Um, do you have anyone that's using the product already? Or if not, do you have anyone that is, waiting to use the product, that they've already said they're going to use it?
Mm,
Um, these are the most basic things and most important things at a seed round.
right. So can you disclose how much money you've raised in total?
So not including what I put into the company, we raised 900,000 for the seed round.
Okay. And what was that money actually like used for?
Development, basically
Development.
salaries. Salaries are all your most like the highest cost you have for your business.
Mm, got you. So then when you had to go back into redevelopment, were you then looking for more funding or how did that work? Like what did you end up having to do?
So we actually raised the money after we pivoted to the team collaboration part. So
Okay.
I funded us through the first one, and then we said, oh, we need to pivot. And then another year or more, we were working using my money. And then when we got to a point where we felt like we need more money to continue, and I can't afford to continue funding it,
Mm,
that's when I went to these investors, and we were already on track to launch that second product, the team collaboration one.
got you. Okay. And how did you know that these investors were the people that you could work with essentially? Like I know you said a lot of them, one you cold called and the other one or cold emailed, and then others were people that you were more familiar with. So I know tapping into your network is pretty much part of that, but why not other people? Or were these people just the ones that had the funds available?
those are the people who had the funds available, were responsive and willing to give me money.
Mm,
The thing is, there's multiple different kinds of investors, right? There's an investor who has a network, who can help you to grow in a certain way, whether it's finding advisors or other investors or users or whatever. And then there's other people who they have money and there's not really much else they can add, but they believe in you and they're giving you the freedom to just go and build.
right.
Um, you know, they were all pretty much in that regard.
Mm. Did any of them understand or have a deep understanding of what it is that you were like the problem you were solving or the market that you were
Oh
going
yeah.
to? They all
Yeah,
did.
yeah, of course. I mean, like I said, we did a lot of research. And so we were able to very easily explain to them the value of what we were doing and why. And, through my own podcast, I had talked to a few hundred company owners, and every single one of them was like, when is this thing going to come out? This is incredible.
Mm,
Like, we use Slack and we pay for it and we hate it. And if there was something else that was better, then we would switch very easily.
right.
So we all knew that there was a tremendous demand for what we were trying to build.
Got you. So maybe let me rephrase my question. Did the investors have previous knowledge before you presented this information to them?
Previous knowledge of what?
What your product was, the market that you were trying to get stake in, like anything about the actual workings of like Slack, or do they understand those technical parts of the business before you introduce the idea to them?
Not really sure, to be honest.
Okay.
Yeah, I mean, they were all in the blockchain industry, so
Mm,
that was their specialty.
got you.
That's how I met them all.
Okay. Now the
Yeah.
reason I ask is because there's this common misconception that you should reach out to people who are only familiar with what it is that you're trying to do, that they could
Mm,
possibly offer you mentorship in a sense to kind of aid in making sure that you're profitable. But I've
mm.
told people that, that's not necessarily always the case. If they can understand, especially with research and support of like why this is actually needed and what problem you're solving,
Mm.
they'll investors are intelligent, some mostly intelligent people, and they can understand what they're going to be investing in. And at the worst case scenario, they know they're taking a loss and they know what they're willing to invest, right?
Mm.
So that's what I kind of wanted to dismantle, but it doesn't seem like there might have been insight into that beforehand.
Yeah, I would say the way that I approached the fundraising was I really just need money and the freedom to build, because if I need mentorship, I can find it.
Mm,
Right? Like I said, with my podcast, I've had hundreds upon hundreds of hours of free mentorship from other CEOs,
yeah,
and you can hear all of it. So I didn't really get mentorship from my investors, and that's okay because I wasn't looking for it.
got you. Okay, so you mentioned freedom. I think we should really put a big exclamation mark behind that because
Mm.
sometimes um investing people move away from investing because of maybe the stake that the investor is going to take. That could be one kind of like golden handcuff, but then also they may want a lot of say into how you operate day to day. So how did you navigate that? Other than just having like an open that conversation is what it seems like you did.
I just said, look, guys, I think I know what's best for my business and I want to run it the way I want to run it. And if you have a problem with that, then buy more of the company. But really, after I got the investment from three of them,
Mm,
I never heard from them again for like a year or more,
interesting. They
because they know it takes time to build. And they're like, what's the point in me asking you for updates? Because nothing's going to change, right?
mm,
They had their own businesses and things like that to run. The other two I kept in constant contact with, and I still have constant contact with them, um, because they have more of a network, more of an ability to help. It's just that where they could help wouldn't come in until a little bit later and where we were.
got you. So I'm glad you said that because then it seems like the investors know that they're not going to be getting like 6 month, 12 months, maybe even 2, 3 year returns on their investment. How long do what is like the repayment rate for you?
Well, I mean, we didn't have anything set because when you're raising towards a venture capitalist path, every investor has their own cycle. right? Some of them are looking for 3-year return, some are looking for 5, some are looking for 7 or 10.
Mm-hmm.
Some of them are looking for multiple. And, so someone might say, I'll give you $500,000 right now, and I want to sell out half of that, at your next round, whether that's a year from now, 2 years from now, 3 years, I don't care, but I'm going to sell out half at that point. So everyone's really different, and you have to have those conversations with them. So I think with a lot of VCs, before the market being where it is now, before COVID, I think the goal was raise as much as you can, as often as you can, raise your valuation as high as you possibly can, go public or get acquired, and then we'll all exit at the same time.
Right.
And that could still be a 10-year horizon.
Mm-hmm.
I think what investors are looking at now is how profitable can you get and how fast can you get there? And even if you raise less at a lower valuation, what matters is that you can survive, so that if you need more money, you're not going to potentially have a down round. Right? Because investors don't want to give you money if they feel like they're trying to save you. They want to give you money because your train is running off the tracks and you're desperate for more money to fill in the gaps to make sure you can keep blowing up.
Okay.
So if that means going slower and becoming profitable, then when you do go to raise, it's because no one's going to be saving you. And then you can ask for much higher valuations and much more cash, and you have a lot more data. So I think startups are changing. And I'm glad for that.
I love that you said that. I think this entire month, that's pretty much what my mouth has like run dry, repeating over and over. If I'm investing in you, I want to know if that first you have a plan in place in case you do crash and burn, right? Or you are on the path to crashing and burning. You should know that you're on the path to crashing and burning, okay? And be able to articulate that. But then also, investors want to know that they're investing when you are at a point where you like can't take on any more demand, like the orders are coming in and you just can't, like fulfillment is an issue, or you had a viral video on TikTok all of a sudden, and then like now you need $1 million to fulfill these orders. Like that's when they want to come in, because they see the proof is in the proof of concept is there, right? So thank you for putting a pin in that. I'm not going to say it anymore. I promise. So yeah, okay, that's important. So I know you had like a little bit of a rocky period between you and an investor. Did you, I'm assuming you did, right? Did you ever mitigate that? And then like, what's the end result now?
It hasn't been solved.
Okay.
To this date. We had to let the team go in August. And my former COO and I decided to start a consulting firm because we have to feed our families.
Right.
Yeah. It's a shame, but it is what it is. Basically, we were promised money and it didn't arrive in a time that we could use it. So we tried to get new investors to come in, and because of the market and because of our situation, nobody wanted to touch it. And so we were basically left relying on that investor to, pay in full, and he hasn't. So we had to let the team go and move on.
Okay. So what does moving on look like? Sorry to, I mean, clearly it's an obvious question, but also like I want to kind of break that down a little bit, because does it mean that the company is dissolved? How do you communicate that to your previous investors? Like what does move on mean to you in this instance?
The company structure still exists.
Okay.
Because meaning I, since I'm the largest shareholder, it's my financial responsibility to pay for it to be shut down. And because we're in Singapore, it's like several $1,000s. So we're currently at a point where I've actually next week have to talk to the lawyer in Singapore about shutting it down, because we can't afford to keep it going, but we can't afford to shut it down. So that's a fun one.
Gotcha.
But yeah, dealing with investors gave me a lot of anxiety to have to tell them that there's a very high chance they're not going to be getting anything out of it. The team is still owed a lot of money in salaries, which is not fun, because I told them that I would take it on my own responsibility, which I currently am not in a position to actually do that.
Right.
So moving on looks like a lot of anxiety and panic attacks, honestly.
Mhm. Yeah, thank you. Thank you for that, Sean, because my next question to you was how do you deal with that mentally? Because I'm sure it's a huge mental and emotional load.
What's really helped, and I'm being completely honest here, is microdosing psilocybin. You probably haven't heard many people talk about it.
Yeah.
Psilocybin is the scientific name for magic mushrooms.
Hmm.
And the reason why I say psilocybin instead of magic mushrooms and the word microdose instead of not microdose is
Yeah.
that there's a lot of evidence that microdosing psilocybin or MDMA or ketamine or LSD is really, really good for your mental health. And I can tell you that it's been extremely helpful
Okay.
for me to deal with a lot of the things that I've been going through for sure.
Got you. And is it offering you, I mean, other than like the anxiety being diminished or controlled, rather, is it offering you the clarity that you need to be able to make decisions moving forward?
It makes it so that I can think clearly every day because oftentimes the anxiety or the panic attacks are so bad that it becomes detrimental to being able to make decisions.
Right.
So yeah, the psilocybin's been quite helpful in just being able to function on a daily basis.
Yeah.
Being an
Nothing.
entrepreneur is not something that like everyone should do, especially if you can't handle the stress of having to let your team go or deal with investors or launch your product in the wrong market or the wrong product or in the wrong time. Or yeah, being an entrepreneur is like harder than anything else I've ever done. And I've done a lot of crazy things in my life, except having a kid, which I've heard is also pretty crazy.
Yeah. I'll tell you more about it one day.
Yeah.
Um, okay. So, I mean, honestly, I think this episode probably rounded out a series the best way. Like I think you've gotten to the mental part of mental money, right? You've gotten to the money side of mental money. And um the next year, I one of my goals was to kind of be more transparent about like the actual inner workings of my actual business because
Mm.
we're unfortunately like fed a lot of information via social media or just online about um businesses being like this glamorized win after win when most people only really share their highlight reels. And there are so many losses that come with that. And like, I love that even though you are very open and vulnerable and accountable about your situation, you also made it a point to you're not, it doesn't seem like you're ashamed of it. I could be wrong, but even if there is shame, that's something that we have to deal with and we have to get over in order to get to the next thing that's gonna, that we're gonna create or that our brain conjures up or whatever the case may be. So thank you so much for sharing that, Sean. I really do appreciate it. And I think moving more into next year, that's gonna be more evident as like they say we're not in a recession yet. They didn't call it yet, but as the restraints start to tighten a little bit more, we're going to see who survives, we're going to see who makes it out of this, and then who's going to be mentally equipped to be able to deal with whatever this is, right?
Mm.
So with all that said, I think a good way to end this episode, other than letting us know where we can find you, is what words of wisdom would you want to leave with entrepreneurs who are new, because this is who this is for, right? These are people who have not really like seen too much profit yet, or they're like deer, like newborn calf that is just kind of like trying to get their footing, right? So what would you
Mm.
offer them to get that good stride going, that good strong stride going, and as an entrepreneur, but also as someone looking for investments?
Uh, if you're going to start a business, don't quit your job first. Everyone says, quit your job, go do this thing that you love. A lot of people don't even have an idea for a business.
Mm,
So the first thing you should do is get your finances in order, right? If you've got a job that pays well, save up, right? If you can figure out your cost is 4,000 a month,
mhm,
look at how you can get your costs down as much as possible. Let's say you can cut it to 3 or 2,500, then save a year, maybe 2 years of that in cash so that you can live worry free if you have no way to have a salary in those first 2 years, maybe even 3 years,
mhm.
because sometimes it takes a long time, especially if you're trying to raise funds.
Yeah.
because I didn't get my first salary for 3.5 years.
Me too. 3 years.
But I had made money from my previous business, so I was okay.
Yeah.
So yeah, figure out what your costs are, then save up what you need. And then in that time, figure out what it is you want to do and learn how to get started in a way that is the cheapest as possible.
Mm-hmm.
So once you've saved up your rainy day fund, then start saving up for what it's going to cost to pay for the business. Because if you save up for your rainy day fund, but then you dip into that to cover the cost of starting the business, well, you now don't actually have a rainy day fund, and you could hurt yourself in that regard mentally.
Yeah.
So once you've got your finances figured out and you've got some cash set aside to build something, then start to figure out who your ideal customer is going to be, and then go talk to them and ask them if they would pay for this thing if it was built. And if you're lucky, you can convince them to give you money immediately for something you haven't even built yet, so you can go build it so that they can be your first customer. Yeah. It doesn't always happen, but if you're not willing to ask them at that point, you shouldn't be running a business, because as the founder of a business, what you're going to be doing as your business gets larger is the same thing: lead gen and sales, right? Even if you're a technical person trying to build software, sorry, lead gen and sales.
Yeah.
Eventually you're going to have to you're either going to have to hire someone to do lead gen and sales, you're going to have to hire someone to manage the tech. But at some point you're going to have to, let go of something, and you have to decide what that is. But the thing you're going to be doing from day one is lead gen and sales.
Yeah.
So if you don't feel comfortable talking to strangers, get over it. Lead gen and sales. Go to Toastmasters. If you're shy, you got to get over it, right? Running a business is really where you discover who you are. And people say, oh, go get an MBA, go do this, do that. No, go start a business, because you will mature really fast. You will grow incredibly fast. You will be forced to confront all of the darkness inside of you, and you'll have to continue working on that as you build your business, as you build your team, as you deal with investors, as you deal with podcasts and PR and being a public figure, if you are lucky enough to get to that point, if that's what you want. So being an entrepreneur is freaking hard. It is a lifetime of ups and downs and stress and anxiety, but don't forget to enjoy the wins. Don't forget to, I guess, how do I say this? There's two ways of doing it. One way is wrong, one way is right. The way that almost everybody does it is they set a goal, and as soon as they hit that goal, they feel empty inside, because now they feel like they need to get to the next thing and the next thing and the next thing. That's empty, and that will burn you out, right? That's the wrong way to be an entrepreneur. The right way to be an entrepreneur is to set a goal and then stop and appreciate it and go and think about what it is you learned from that experience and why that was your goal. And then if you want to have another goal, think about why you want that goal and what that goal is going to bring you in terms of value, whether it's more freedom in your life, more money for your family, the ability to do more, in the community, whatever it is. But you have to tie celebration to your wins, and you have to share those wins with your team, and you have to prop them up and give them opportunities to thrive without you, so that eventually you can make yourself useless. The best business owners are the ones who make themselves completely redundant. And the reason being is your team doesn't need you. You're in their way. You're going to be the bottleneck to your own success. That's about it. That's like years of just knowledge just being tossed at you. Sorry.
No, I could have listened to 10 more minutes of that. Yeah. No, you're right. I couldn't have said it better myself. Thank you, Sean. I appreciate that. So if anyone wants to find you, where would you do that?
Yeah, so I've got a YouTube channel where I do a business podcast. I call it The Humanity of Entrepreneurship. So as you heard, I am very open about my own situation, and I get pretty vulnerable with guests, and I get them to be vulnerable as well. And we talk about, functional aspects and educational aspects of being an entrepreneur, things you can learn to become a better leader, but also what it's like actually being an entrepreneur, going through the daily grind of it all, and what are the ups and downs like. Instead of, oh, you raised $10 million, congrats. It's like, yeah, but like you gained 30 pounds and your wife left you because you weren't paying attention to the family. that's the stuff. Like that's part of being an entrepreneur, unfortunately, for some people. So you can find that youtube.com /@ Sean Weisbrot. So just put my name there with no dots or dashes or underscores or anything, and my channel's there.
Awesome. Thank you so much, Sean.
Thank you.
Thank you so much for listening to the Mental Money Podcast. Please go ahead and remember to subscribe, but don't hoard all of this good information for yourself. Share this information with someone that you know could use it, especially if they need a shift in their mindset or someone who would love to have more money. So until we meet again, remember, like Uncle Snoop said, keep your mind on your money and your money on your mind.